Oh, so today we'll talk about how I made a loss on this day. It was 26th of June, Thursday, in the Asian session. And it was a big rally that day towards the downside. As you can see, this is the part that I'm talking about, and it went on to do continuation till the New York session. So the entire day it was in a continuous rally downside, and how I could have captured it but I missed it and rather hit a stop loss. So starting off, you will see in previous videos the logic behind why the trend is down right now. But in brief, if I were to explain it, then this is the market structure shift that happened. And next up we have this order block which got tapped, and then we got a displacement downside. Now in this process of displacement you can see there is this one FVG, and this is the second FVG. Right here, and here. I think these were from 1 hour time frame. Let me check. Yeah, even on 1 hour time frame, 15-minute time frame, all the time frames we have two FVGs here which were left unfilled. So my logic was that price would come and mitigate it and will then move down after mitigating these FVGs, or at least tapping them on the edge. But rather than that, and with that notion, sat I sat in the Asian session thinking, as you can see here, we saw a market structure shift happen on 5-minute time frame. And then later we had this FVG and this red color order block which got tapped. So my notion was to buy from here, to long from here, so that I can have a very small counter trend buy from here to here till these FVGs, and then from these FVGs I'll go towards sell. But unfortunately that did not happen. First reason would be to not check for FVGs on a lower time frame, but in counter trends those might be useful too. So I guess besides that, what can help is staying in check. If you, what do I mean by that is, if you go on 15-minute time frame, you will see that next to these two FVGs, below these two FVGs, there's also one more POI, and that is this order flow. As you can see in this entire leg of red candles, these are the only two green candles. And see how price has failed to close beyond its equilibrium. Even on a smaller time frame, if I take you on a 15-minute time frame, you will see exactly how the price has failed to close its body beyond the equilibrium of this order flow. And it was important for us to notice this while we are trading, while we are having our biases, that what is coming in between our way on a higher time frame. So that's one point. If you would have seen a rejection being taken from the equilibrium of this order flow, then you might have changed your perspective. Along with that, there was one more thing that happened. If we go on 5-minute time frame, you will see three swings. First swing, middle swing, third swing. What is this? This is intermediate term high. Once this intermediate term high was formed, what happens next? This low gets broken. And now what do we have here? We have a clear path downward, because there's no way on earth after breaking the short term low, this wasn't short term low, it's intermediate term low. You can see the price changed its trend, its direction. So there was no way that it was coming back to towards this intermediate term high. And that is exactly why you should have entered for a downside a trade in this scenario. Okay, so this was my mistake, and see you in some other video. Thank you. Bye.